That could be a good essay.
This meeting is being recorded.
Your sound is not that right.
Good morning, everybody. Good to see. We're going to have probably people coming in throughout the next few minutes or so, but I just wanted to give an overview of our meeting today and what we're going to be talking about and make sure that we have the same expectations. And the biggest thing I want you guys to know is that this is informal, and I hope we can have it become interactive between us, because my big objective is for you guys to get something out of this, and that's learning. Like the class is named, it's Accounting 101. So I want you to expect it to be very basic accounting. But what we've done is we've taken some of the basic accounting principles and we're focusing that towards a language in entrepreneurship. And the idea is to be able to have it where you understand some of the key terminology, but you understand how these financial reports work, how they interact with one another. So at any time, we've got myself, Sarah Doran, who is here. She's our office manager, and Rob Del Mastro. He's another senior business advisor. They're both on the session. So between the three of us, if you just wave your hand or use the chat or whatever, we're going to be looking for any questions that you might have. Feel free to ask questions. Remember that this is Accounting 101, and we want to make sure that we open it up to where you guys can actually learn something from it. Get into the agenda here. Right here, we're going to cover today what I call current financials, and that's your income statement, balance sheet, and statement of cash flows. Then I get into a little bit with tying in budgeting and what we call pro forma financials. That's one of the best things that this office can do. We pride ourselves in our ability to do financial modeling with our clients. And we're at the month of January right now, and it's a good month for us to look at planning out the year and what we expect, a win to be financially for your companies. So I really want to focus on that budgeting and looking at the pro formas again. And then the area of finance, just some sources of capital. If you're looking for that, I know that's a hot topic for us today with clients, especially with the new rules of the Paycheck Protection Programs out, and EIDL is still available. And ultimately being able to look at what your return on investment is for your business. So let's go ahead, and what we'll do is we'll get started into it. And again, I don't want to have this be if you have a question or anything like that, please feel free to stop me or get Sarah's attention or Rob's attention. Okay. And I think what I would want to do before actually we get into is Rob's brand new with us. He actually started with us on Monday. You want to say hi, Rob?
Rob.
Welcome, everybody. It's great to see everybody here.
Congratulations.
Thank you.
But Rob had a business. He's also a business owner, just like you guys are. He had a couple of businesses in the area, one in Marlboro, and he had a co-working space in Worcester here that he ran for a long time. So he knows quite a few people in the business world, and he's got some good lessons learned to share with us maybe later on today. What was the name of the co-working business you had, Rob?
It was Clearly Co-working right here on Grove Street in Worcester.
Great. And Sarah Doran, she corrects me on that all the time. Sarah Doran, the proper Irish way of saying that name. She is our brand new office manager. She was with us on a temporary basis since October, but is now officially on board as our office manager. So she's the one that keeps us all straight and making sure that you guys, if you have any questions, she keeps us in line, making sure we're working for you properly. So Sarah Doran, she's the main point of contact for us in the office.
Good morning, everyone.
Good morning.
I know some of your faces and so forth, and if we get a chance at the end of it, I'd like to break out some time for Q&A at the end and get into a scenario where if you get a chance to pitch your business.
Then what if you just get the...
Please mute your mic if you need to. But anyway, if you get a chance to pitch your company, don't hesitate. You got a lot of people out here that would love to learn more about what you do. We're here for basic accounting right now. A basic accounting. Is there anybody out there that considers themselves an expert at managing the books of their business? I'd like to have them help me today.
Don't be shy.
Well, starting off, before I do anything, I just want to give you just a real world story. That's a client that I have. It's a current client right now. Good operator. Uh, Two people. They have a business that they launched last year, and just absolutely rocking it to the point that they have revenue every month, $80,000. And they had this good thing set up. So I mean, they are just working it, and bringing in the money. And the cool thing about it is their wife had an accounting background, or uh, one of the partners' wives had an accounting background, and she was doing all the QuickBooks entry. So $80,000 in cash flow. She was pretty busy managing all that. Then we had this thing called the COVID-19 pandemic come in. They have 3 kids. Well, the Worcester school system says we're not going to be meeting for class, so your kids need to stay home. And there was just no way for her to keep up with the books of the business and do homeschooling for 3 kids and manage everything. So they put all that on hold, like a lot of people might do. Comes to me, and we're 6 months into this now, and saying, "Uh-oh, I can't keep track of all this. I don't know how much money we're making, and I'm managing my business basically by my bank statements." And it goes back to one of the first business partners that I had when I learned how to be in business, and my first operation that I went into. He was his entire career, he managed his business by looking at the cash flow. If the bank account balance went up, we must be doing well. If it's not going up, I got to figure out what's happening to it, and the balance is going down. I say that, and I don't want you to think that I'm being tongue in cheek with it, but there's a lot of operators out there that's how they manage their business. And you can be a very good operator at generating the revenue, which is critically important, but you also have to take time and learn good accounting practices, because if you don't, things can quickly get out of control for you. And I think if there's one thing that you take away from this class today, it's learning the importance of being able to manage that cash flow on a daily basis, and knowing really how much money you have coming in, how much money you have going out, and everything you're doing is part of your plan. If you're able to do that, you're going to make money this year, and you're going to do very well with what we've got. Understanding what we're talking about today being the language of business, let's break this down into 3 statements. I've got them listed here as the balance sheet, the P&L/income statement are all one and the same. And the third statement is one that's less familiar with people. It's called the cash flow statement. But before I get into the details of that, let's talk about just some basic terms. Look at it like this. The top line of a financial statement, you'll hear accountants refer to that. You'll hear business owners refer to that as the top line of your financial reporting is the revenue line. It's every dollar coming into your business is the top line. I don't want to oversimplify this, but these terms here, I just want to make sure that we're talking about the same things. Top line of any financial statement is going to be your revenue line. Below that, you're going to have what's called cost, your costs of goods sold. Cost of goods sold would be like if we were to say that we sold hot dogs for a living. Every dollar that we collect at the cash registers our revenue in, the cost of our hot dogs and the cost of our labor become our cost of goods sold. We subtract all that out, we end up with what's called gross profit. That's the gross line. And there's a margin that we want to look at. Typically, what I look at for a lot of businesses is the cost of goods sold ends up being somewhere around 35% in that range typically. And that means 70%, 65% of the revenue is left for gross profit. Less out from the gross profit, you subtract all your expenses. This is where your rent, your utilities, phone, anything that's out there for that, you less out all your expenses to end up with net profit. And I'll tell you, the most important line that I like to look at is looking at net profit as a percentage of gross profit. Take the net profit, put it on top, and divide it by the gross profit. You'll end up with a percentage. My goal for a very good business is again, another rule of thumb, is having that to be at least 40%. If you focus that net profit as a percentage of gross profit, basically what I'm saying to you is every dollar you earn as gross profit, you keep as a net profit able to take home. If you don't watch that line, you'll be making a lot of money for a lot of people. It's not a good thing for a business owner. So let's look first at the balance sheet. The balance sheet is just a snapshot in time. That's all that it is. We take, if we were to look at today is the 13th of January, 2021, go figure that. But we would look at this time, at this hour, at 10:15 on January 13th, 2021. This is the snapshot of what our business is financially. And the formula that I have highlighted there in yellow, assets equals liabilities plus owner's equity. It's that snapshot in time. So all the assets that you have, they are worth $1 value. All those assets added up equal, if you have any liabilities, like if you owe somebody for it, if you owe a bank or some other lender for it, and less what you owe, the remaining amount is what you have and what's considered owner's equity. That formula is not going to change. It never has changed, but basically it's there, and it's an easy, quick way for anybody that's analyzing your business to determine the value of it. And from that, it's like a report card. Look at it like that. It's called a balance sheet because that equation right there is always in balance, or whether we like it to be or not. When we're not doing well, having that be in balance is always something that's going to be in time. So understanding that balance sheet's always in balance. It is a snapshot in time, just like looking at a photo. It is what it is. But it's giving what I like to call the big picture view of the business, the financial health of the business. And of course, each one of these items are broken down. I'm going to give you an example of what one looks like coming up. But if you look at here, this is just a fictitious balance sheet. But on the left side, here where we have assets, it has current assets. When you see the term current assets, what that means is you have the word current means it's easy to convert into cash. So you have the first line, the most liquid form of it is the cash that you actually have on hand or in bank, cash or cash equivalents. And then after that, you have what the money that people owe you that it's probably going to be in your bank account within the next 30 days. You don't want your ARs, your accounts receivable, to ever age over 30 days typically. And then you have so forth. If you prepay your expenses, stuff that's actually not your non-cash assets. After that category, you get into what's called, where it says property and equipment. That's stuff that where it takes a lot longer time to convert that back into cash. You have to sell the property, you have to sell the buildings and equipment that you might have, and then other assets at the bottom. Now, on the right side of a balance sheet, you'll see the first part there, which is liability and what's called shareholders' equity. The liabilities go first. Again, going back to the current side, the most liquid form of the liabilities there is stuff that's due right now in the form of cash, and the stuff that's most current in time too. So if you have a short-term notes that you owe somebody money on, that's where it's going to be listed first, all the way down lower to more long-term debt. Then in the bottom right quadrant of this, where you see shareholders equity, that's the amount that's left over. Basically, if you look at it, I have $10,000 worth of cash in the bank and assets, and I have a loan of $5,000. That means I have $5,000 equity in my business. All that complexity right there is just saying that same thing as I just said. A profit and loss statement. This is what I look at more than anything with what I'm looking at any entrepreneur or business, is I want to see basically the report card of how this business is doing over a period of time. Now, the one thing you want to look at with a P&L statement or income statement is it's the same thing, just a different name for it, is it's over a period of time. Typically, we want to look at each year broken down into 12 income statements for the year, January, February, all the way through December. And those are like periodic reviews of how your business is doing. And on this, we want to be able to look at those things that we had mentioned earlier, your gross margin and your net margin. Look at it like a report card for how well your business is doing. And this is something that I recommend that you look at and evaluate yourself and your business every month. Now, the idea that what we want to be able to really highlight today is being in January. Look at 2021 for the year. Have you guys thought about what would be a win for you for this year financially? What are the goals for this year? And it might be X amount of dollars or whatever that is. We want to break that out to achieve that. It's sort of like making our New Year's resolution and getting to the gym. Say, I want to lose 10 pounds in how much time? Well, if you break that down for 12 months, it's pretty easy to do. If you break it down into 12 weeks, it's a little harder to do, but it could still be done. You just have to change how you approach it. The idea you want to do the same thing is to define the win. That's an important step. What does it mean, or what is a win for the year? And looking at it, so if you say that I want to earn for myself, I want to be able to make $100,000. Well, you add your expenses to that. Then you add your cost of sales to it, and it lets you know how much revenue you have to do to get there. And from that, we're able to assimilate some kind of metrics for it. Now, I don't want to go too fast on this because this is an important point that we want to bring out, and I'll talk about it in a moment with our budgeting. But looking at that goal, the first step I want you to remember is to be able to define what a win is for the year. So we have it where there's no surprises when we come to December of the year, that we break it down quarterly all the way down to the monthly level, and we evaluate our progress. We do that with the P&L statement. Here's an example of one here. And like I said earlier on, in that real simple form that I put up, is the top line revenue there. In this case, it's 57,860. That's the first line of breaking down the revenue. This company here, Larry's Landscaping, they've got it broken down where he's got 4 revenue items: landscaping services, markup income, retail sales, and service, added up to be his total income, which is the same thing as his revenue, 65,698. From that, we subtract out the cost of goods sold to get to the gross profit of 61,000. In his case, he itemizes each one of his expense items to get to his total expense, and then from that, get to his bottom line. You hear that phrase, the bottom line? That's because the net income is the bottom line. This is actually a printout from a QuickBooks. It's exactly what a QuickBooks income statement or profit and loss statement looks like. And we're able to look at this each month. Now, if his goal was for the month, we break that down, that he's able to evaluate his revenue for the month and say his budget called for, or his forecast called for, $50,000, he's actually ahead of forecast. But if he's not managing his expenses, say his expense total would be the 14,000 there. Say he was looking to make $20,000 of that to retain that. That means he's not managing his expenses very well. Looking at the scenario here, I don't know if somebody has a calculator, but in this model that we have up here right now, the net margin that we're looking at, net profit as a percentage of gross. If we were looking at that, does somebody have a calculator? They can do that math for me real quickly. 14,740 divided by 61,478.
About 24%.
All right. Would you consider that to be a good margin for a business? Good return on investment?
No.
I wouldn't either. So we would look at that. And if this were our business, we're looking at it, what are we looking at that we would see here that we could work on improving? The idea is to look at that. Our goal is to get to that 40% net margin, 40% net margin as a percentage of gross. To get there, we would have to really itemize or isolate some of these expenses to be able to look at that. If you're not doing something like this, your expenses, I promise, will get out of control for you. Now, the term budgeting, it's the same concept of budgeting your bills at home for yourself. If you do it at home and manage the amount of money you have coming in, you need to at least do it much more significantly for you when you're operating, being a steward for the finances for your company. It's important for you to look at. Now, here's something to look at. How much money do you want to be paid? If you notice that that's not on here, that's because this does not factor in how much money you want to take home throughout the year. You'll have some equity line items that your accountant's going to want to do, but you have to factor your own personal income into this scenario too. Now, ideally, if you do this every month.
Tom?
Yes.
I have a question.
Okay.
From Becky Leonard, you said cost of goods sold was labor and inventory, but on this profit and loss payroll is under expenses. Which is the best way to categorize labor costs?
That's a great question, Becky. Looking like for your scenario, your office people, if you're going to have payroll expenses, it's going to be a line item expense. But if you're selling service, here's the way to look at it. If you're billing for service, let me use an automotive dealership analogy or parody for you. If you take your car in for service to a mechanic, they're going to charge you for the service done on your vehicle. Basically, they're selling you service. As they sell you service, that mechanic's time that he or she gets paid, they're going to get billed. They're going to bill per hour on that. So that mechanic is going to get paid, say, $20 an hour. That becomes a cost of sale because his time is what they're actually selling to you. I'm hoping that makes sense to you. So you're going to have, if you have a wait staff for a restaurant, the same thing. In your case, I think that when you're billing hours for repairing instruments and so forth, anytime that you do that, you're going to see an item for classifying that as a cost of sale. But if it's just an expense item for office personnel or for other people that you have that's not generating any revenue, that's the key factor to it. If they're not generating revenue that you're selling, then it's just going to be a line item expense. Does that answer your question, Becky?
Yes, it does. Thank you.
Okay, great. All right, looking at this profit and loss statement, the payroll expenses here, this is not out of line. Most commonly, this is where a lot of small businesses in particular will quickly let this number get out of control. And the reason is us as entrepreneurs, we have one major disadvantage that larger companies don't have, is that we get to know our employees like family, and we have a tendency to want to take care of them. And I understand that, been there, done that, got the t-shirt, and I've made some good decisions and I've made some bad decisions with my employees in the past. But I'll tell you, you have a responsibility. Your number one responsibility operating a business is to have that bottom line, that net income, to always be in the black. If it's not, you're not doing your job. Look at it like that you have to keep in business to be able to afford to employ people, including yourself. It's an important thing to remember. I don't mean to sound cold on that, because I do understand that employees are like family.
Tom, I have a question.
Yes.
Hi there. So in my business, everybody is involved in customer service at some point. How do you decide what percentage of that goes in cost of goods sold versus payroll?
That's a good question. Don't complicate it. Involving in customer service, where you have a team that's
Yes.
out and the whole team is working together to make that customer's experience good, is different than actually selling the service. What type of business do you have?
Sorry. Good.
What type of business do you have, Chris?
Yeah, so we build vegetable gardens for folks.
Okay. When you
So-
build those gardens, do you pay for the time, or do you charge for the time of building the gardens?
I build it into the flat cost for the garden.
So if I was a client or customer of yours, I would pay you one fee for the whole thing.
Right. Mm-hmm.
What I would recommend that you do is have that broken down then into a couple of areas, like materials that you would charge for, and also service. So I don't know, with building a garden, how many technicians do you have that's actually doing the physical labor?
We have about 10.
That's on one job?
No, not well. With COVID, it's a little bit different. So very few people on the job, and it takes a lot longer. But yeah, it's a team. Some people work some days, some people work other days. The teams mix up. So are you saying, like, not for the client, but just for myself? I want to have a line item for labor of installation.
Yeah, well, let me try to simplify that, because that's a great question to ask all of us. And I think it's an important point, and many people get hung up on this. I don't know on your business, but to present a garden, just an average garden, I'm sure you do different sizes.
One size, different
Okay.
amounts of service. Sorry, so we build gardens and then educate people how to take care of them and maintain them. So
Okay.
an ongoing service over the course of the season. It's a one-time build, and then a variable amount of service over the course of the season.
How do you determine how much money you make on the job? I don't,
That's a great question. I don't know.
all right, well, don't
Where
feel
does
bad
the
because
answer?
that's a canned question that I ask clients all the time, and your reaction is typical. That we really want to think about that from that perspective. So what does it cost to do it? If I were a client, what does your service cost to put a garden in my yard?
It costs about $1,000 with service.
All right, for
You gotta-
$1,000 to build that garden, how many people would it take for me to build a basic garden? How many people do I expect to come out to my yard and do that?
Three.
Three. And they're not doing it for free. So what do they cost you?
Correct. They cost me about $40 an hour. All told.
$40 an hour. How many hours does it take to build that garden?
It takes about 10 hours.
All right,
Collect.
so 10 hours at $40 an hour. So there's $400 right there, right?
Correct.
That $400 is the cost of sale. Does that make sense? It's not an expense. It's a cost for you to, when you and I, as me being your customer, we have an agreement for $1,000.
Mhm.
For you to meet your agreement, you've got to pay help to do this, or you have to do it yourself. So that
Right.
when you're charging for their time. Now, the other thing you have to add to that would be your materials and so forth that you have.
Sure. What is the advantage of having something either categorized as cost of goods sold or an expense? Is there an
Well,
advantage to getting it above the line of profit?
There's a lot of reasons that we like to do that. And for me, as looking at it, I'm not big on that from an accounting perspective, but from an operations perspective, I'm really big on that. I want to know what that gross margin is. What's my gross profit? So right away, 40% in your scenario there, 40% of our revenue is sent to for cost of labor. So looking at that, I'd like to get that down a little bit. So I don't know anything at all about your business, but I would think that to get that to the 30% or 33% range, that gives me a metric that I can look at and measure against other people in that industry or other businesses that are out there. And we look at those metrics to determine what the efficiencies are in your business. Did that answer your question?
I think so.
Okay.
So. I don't want to capitalize the time here. I think it does.
If we put that down in the expense item, if we were to have that in the expense item, I'm not going to know what my gross profit is. I'm just going to know what I have net profit. Now we have so much net gross profit that we keep over time. Every month we want to look at that gross profit number. Now we can set a metric on that, and every job that you bid out, that I know that that's going to be 40% every time. If I'm not managing that, it's taking too long to do these jobs. It's going to cut into your gross profit. Now I've got to manage the second part of that, and that's the expense items. So all that gross profit is profit to the company. Now that's the part that you want to be able to keep. So for the extra $600, say that your total margin for gross is $600 that goes into gross profit. How much of that are you able to keep typically? Well, you want a rule of thumb that you're going to manage your expenses to be able to keep ideally at least half of it.
Okay.
Let me go through this, and we'll pick that back up at the end. And if you want to, we can meet offline with it, however you'd like to. But I think it's a great question. It's a very typical question. Yes.
I have just two quick questions. Ruth wants to know if there is a percentage that is appropriate for payroll.
If there is a percentage that is appropriate for payroll. If you were to look at this expense right here that's listed, this is for non-revenue generating employees. I think that's pretty typical. So if we take that 37,000, and if we were to take 37,000 of the 47,000, you're probably going to see a really high number. That's high. To answer your question, in my experience, that number is going to be somewhere around 40% of your total expenses. So basically 25% of your gross profit, 25% of your gross profit is going to go to pay your employees in the office and everybody else at support side. There's always been somewhat of a joke that there's two types of employees. And I've said this for many clients that I've had, two types of employees, those that cost money and those that make money. And I do that because when you're managing your team, leading your team, or if you're on that team, which one are you? Now you think about that when you have employees, which ones do I have that are generating me money? Which ones are costing me money? Now we're in a pandemic right now, things get tough. If you have to cut people, which are the first you cut? The first you cut because it's an expensive item on your expenses. It's expensive to have employees. The first people that get cut are the ones that cost money, typically speaking. That's why when we look at it that way, we'll come back to that number. And I think that's going to be more industry specific than anything. Let me ask Rob. Rob, in the companies that you've ran, where did you have your payroll expenses run as far as a percentage goes?
Gosh, I don't know the answer to that, Tom. When we were up around 200 employees, I don't remember what those ratios were. I don't even want to begin to try to guess at what they were.
No, that's actually a good answer, Rob. Now, he had 200 employees. That's a key number. He remembers that very clearly. But like Chris was talking about, it's hard to recall that off the top of the head. I will challenge each one of you that if you're responsible for being a steward of these financials, we will attest to you that you've got to know what these metrics are in your business financials all the time. Would you agree with that, Rob?
I would absolutely agree with that.
And that's something that we coach on hard every day when we're talking to clients, is to make sure you know this P&L statement. So Rob's answer there, you want to know what that percentage is month to month, to know what it is for your business, to know if it's running high or if it's not. If you don't know that, it will get out of hand for you, I promise. That's speaking from personal experience, by the way.
One more question,
Yes.
and then I'll let you proceed. Leonila, I hope I'm pronouncing your name right. She is stating, what about if I am an English teacher? I have one-on-one and a small group class. Do you charge for planning and service time? That's her question.
A great question. Great questions on this. Let me throw that right back to you guys as a group. And these are people that have this figured out. They've been doing this forever. But if you ever need an attorney, how does an attorney charge you? An attorney charges you from the moment that they pick up the phone. When they start talking to you on the phone, they charge you. They also charge you for any time they pick up their pen and they start writing down notes and so forth. Ideally, what you want to do is be able to itemize every bit of your time, because time is money. And if you can get that efficient, you want to be able to charge for that. If you can do it, great. If you can't do it, some people are a little bit more flexible with that. They say, no, this is what I'm just going to put you on a retainer. This is how much my time is. And they bulk it all together. But the best answer for that is to itemize everything you possibly can. Your time is money. What's it worth? How much do you typically get paid? If you're on the clock, this is how much I get paid. I like to look at that. And, consultants typically charge anywhere $200, $250 an hour. And much like accountants and much like attorneys, as soon as you pick up the phone, as soon as you pick up the pen, and as soon as you start working on a project, you're going to have billable hours. It needs to be justified, though, because you're never going to get around that price is what you pay. That's what your customer is going to pay. Value is what you get. That's a Zig Ziglar line. But you're never going to be able to charge more than what the value is. So that you've got to have a client or customer that's going to be able to pay you what that service is.
Can I ask you a clarifying question about that?
You can, yes.
Yeah, you were saying that consultants typically charge $200 to $250 an hour. Is that across multiple types of businesses? Is that kind of a general rule, or where does that number come from?
Well, where's that number come from? It comes from finding a client that's willing to pay you that. That's my own personal experience with my private practice that I've done. It's what I've been able to get paid. And in the industry, that's pretty typical. But I've always had a rule of thumb that goes with that if I charge you X, whatever that is, I need to help you make in return at least 5 times that. That was my contract always with my clients. Now, the cool thing about the Small Business Development Center, you've already paid for our services. You get Rob, you get me, you get Sarah, you get all of us, and you don't have to pay anything for it.
So, okay, so this is brilliant. Okay, so if I charge you X, I need to be able to, in some capacity, demonstrate that you will be generating 5 times that amount somewhere.
Yeah, what that does is you're dollarizing the value is the term, and that's not an accounting term. What that is that's it's a sales line that you're going to use, but you're reinforcing the value that you're providing for your client. Because the idea is you want to be able to charge as much as you can, make as much money as you can, but in the same time, you don't want to have a one and out with that client. You want to keep that client for a long time. Most of my clients that I've had most of the clients that I've had for years, and I still keep, and they're in different states throughout the country. So I've got to be able to justify my time with them.
How
Do you do consulting, Jessica?
Well, I do, and I'm in the process as an entrepreneur of growing my practice to reach more folks. And so I'm in the process right now of my first official request for proposal. And part of the difficulty is as I'm creating a position for myself, I'm needing to quantify, all right, how am I bringing, what value am I bringing dollar for dollar, which is challenging when I'm building a position that no one's really done before. In the capacity that I'm doing it. So it's an interesting, and I love that you've given it a metric of some kind, like that your goal is that you're bringing 5 times what you're charging to that business. It's nice to just say something.
I'm crazy about metrics because to me that's how you can't fix what you don't measure. I mean, inspect what you expect. What's your specialty that you consult on?
I teach, and so there's my practice, my licensure in the state is as a massage therapist. So I help people get out of pain. And what I've been teaching is I've been teaching physical therapists how to do what I do because I'm working on a tissue in the body called fascia. Have you ever heard of it?
I have. Yes, I have.
That's brilliant.
Podiatrist that talks about fasciitis.
That's right. So you're in like the top 5% of people because most people don't even know they have it. And it's home to 6 times as many nerve endings as are in muscles. So pain shows up in this tissue that no one really knows how to work with. And I've learned because some of the leading research that came out in 2008 that was presented at an international conference is what I've been working on with the clients who don't get better from PT. So I've been basically trained on the hardest cases for the last 15 years. And now I'm teaching it back to the PTs that can bill for it when I can't. So it's a bit of a campaign to bring this skill set, which is easy to teach, easy to learn, to the masses where they can bill for insurance.
That's awesome. Just to share his story, Don Pelto is his name. He's a doctor with Central Mass Podiatry.
Mm-hmm.
He's a client of the office, and he's just thirsty for knowledge and information all the time. He loves to help people. He had a Zoom session with podiatrists from across the country. Yep. And we had a class about the size of this one. We had, I think, 40 or 50 people on it. And he asked me to be on there as a guest. And the number one thing that they were on there for right now is to learn how to operate their practice as a business. And their questions on accounting was no difference than generally what we're talking about here. They've recognized that if they don't learn how to manage their practices better, that they're going to have to go get a job for a larger conglomerate that's owning just a business, one of the insurance companies, basically. And their income will be directly related to that.
Good. Could I just ask you a question? I'm Leonela. Yes. I'm the teacher too. So if I'm help people to speak English fluently with confidence, how do you measure those 5 times? You know, like I know that they come to me, they have no confidence. So the first 7 weeks, they start speaking with more confidence. But how do you measure that these 5 times to make sure you can charge more, or you justify how you charge?
That's a good question. A school teacher, how do you determine the value in what a school teacher provides to a student? That's the same type of service that you have. The 5 times return on investment, they're not generating revenue, but somehow you've got to be able to communicate with your clients, your students. What kind of value do I get if I'm coming to learn from you? How quickly am I learning the language? How quickly am I learning to adapt? Something like that. I would say for you, the metric to measure would be how long it takes for them to be able to adapt to the language.
Okay, great, thanks.
Cash flow statements. This is one that I'm not going to spend a lot of time on. And that's because we don't typically, as operators, we don't want to look at this statement. But I will tell you, if you have a banker, they're going to look at your cash flow statement. If you have financial analysts, they're going to look at your cash flow statement. And really, the most simple form of a cash flow statement is your monthly bank account statement and what that balance is. And I'm going to walk through this from a 10,000 foot level and talk about it. But a cash flow statement, it's got three basic sections to it. Operating income, basically from the profit and loss statement, where the money is coming from. So if you're a profitable business, your cash flow is good. If you're not profitable, your cash flow is bad, typically. But you can have what Jeff Bezos did with Amazon a few years ago and actually tricked a lot of investors, where he adjusted his cash flow statement and his company wasn't being profitable, but they had all this money coming in revenue. And they were able to manipulate their cash flow statement and actually tricked the investors into having good earnings for the year. You have to read up on it to understand what they did, but the cash flow statement that's there is just understanding what it is. And this is why I go back to that story that I told you with my first business partner and him managing his business at the time based off the bank account balance. It's a good way to look at that. And I've had clients that throughout the years, every morning, one of the first things that they do is either get online or call and get the balance of their operating account and their checking account balance. And they do that because they don't want any surprises, to make sure that they have enough cash in the bank to pay for the bills coming out. That's what a cash flow statement does on a routine basis. Now on this, I've got some notes that I want to highlight on there. You have to support operations, 90 days worth. This is a good year to be to highlight this need. And some of you guys are going to differ with me. I promise you that. That's okay, because that's typically what's there. 90 days worth of your expenses. So if we go back to our income statement and we know what our total expenses are per month, if I add all those up and every month I have $20,000 in general expenses, and that's what my average is for the year, I know I need to have at least 3 months worth of expenses in the bank in cash to cover that. Should we have something crazy happen like a pandemic, we need to have cash in the bank. This has been a very significant reason why a lot of businesses have been struggling throughout this last year, because when sales go up and down, revenue goes up and down, we don't have enough to save up for a rainy day, as you so to speak. My rule of thumb on that is to have 90 days worth of cash in the bank up to cover your expenses. You also have to have enough to cover your growth and expansion. It's great to grow, but can you afford to grow? To grow, you've got to hire staff, you got to increase, like Chris was talking about with her gardening business, she would have to hire more employees, have to hire, purchase more supplies to be able to grow 20% for the year. Well, there's a number there that we need to plan for, and we need to know what that is. That's what good financial modeling is going to do for you when you put your forecast together.
Can I ask a general question about that, Tom?
Yes, you sure can.
Great. Okay. So in terms of I love the question, can I afford to grow? That feels really important. And is there a general number that you like to consider for that? A general kind of percentage that you want to see companies have available for that growth and expansion?
Absolutely. They're entrepreneurs. We are all entrepreneurs in some aspect, but just that term implies risk. But I have yet to meet an entrepreneur that is really an advocate for risk. So they're pretty conservative minded when it comes to managing their own cash typically. So if you're thinking about it and you typically want to grow 20% in your year, if you're not growing, that's a different problem. So you want to plan for growth. In your case, with your practice, do you need to hire new people? Well, when you look at this, and if you were to look at your own budget at home, I promise you that you guys will probably look at it and take a pretty conservative approach to, do I have enough money to afford the growth? If you look at your budget and your forecast and you plan for it, it's naturally going to come to you on what your comfort zone is. So to specifically answer your question there, Jessica, is that's something that's going to be unique to each one of us as individual operators. But I will venture to say that that we're all going to be typically conservative. I like to have enough money in the bank to at least give myself six months worth of time to pay for that person. Let me translate that. Say in your case, you want to hire an assistant. How long would you expect it will take for that assistant to get ramped up with training to be able to do things at least to a percentage, 80% of what you're doing?
Give or take, I would say it would take about 2.5, 3 months.
Okay, well, there's 90 days right there.
Yep.
Now, so if it takes longer than 6 months, is that too long? Did you make a bad hire? Would you look at it like that? That's how we need to look at the scenario. Now,
I would take on, oh yeah, go ahead.
If you look at that and it's taking this one person longer, do you justify adding another 30 or 60 or 90 days to them? They may warrant that, or it may be somebody that you look at as a bad hire. Now, typically what we don't look at it objectively because we develop a relationship with that person. That person may not have the aptitude, drive, or character to do the job right for you. So if that's the case, there's an old phrase is be quick to fire and slow to hire to make sure you have the right person on your team.
Mm-hmm.
But you're going to know if you manage it. You can't inspect what you don't expect. And if you know what the numbers are, know what the metrics should be in your mind, then you have a report card to really give you and your business.
That makes sense. And it does. One follow-up or clarifying question. It's funny. I've always worked for myself and by myself since I went into private practice. And so when you were talking about the 20% per year as a kind of a metric for, was that what to sort of set aside? I was thinking about for continuing education and training for myself, which is different than hiring someone or growing in that way. I just figured, so it's interesting to keep that in mind, but the 20% number is a helpful one to just kind of have.
The questions you have are very typical and standard. And you just reminded me of something when you're talking about professional education. That's an investment in your future. Will it help you make more money in the future?
That's the plan.
Okay. Can you quantify that?
Usually, yes. I mean, if the deal that I make in terms of when I spend money on continuing education, I've hired private business advisors and also, like, in addition to working with you all, and hired teachers that I work with, that before I start working with them, I typically have a sense of what the return on investment can be. That's more talking about your conservative risk profiling and everything. I like to make sure to have an idea of the number before I do that.
A great example of that for me, for being a business consultant, is looking at digital marketing. Now, that's been around for a long time, and knowing terms like SEO, SEM, SMM, social media marketing. Yeah. Well, Google created this whole algorithm that's out there that's unique to all of us, and we don't know what's behind the scenes with them. We have to learn that. They invented the game. So to learn how to advertise effectively and efficiently on Google, it would really behoove us to know how to do that. So if I have a client, they ask me questions about pay-per-click campaigns and so forth, I need to know what I'm talking about. So I had to do professional development for myself on that and get Google certified. That was an investment. I look at that and answer the question, can I afford not to do this? So I look at that as technology, the technology curve. For me to be relevant and stay what I'm doing, I can't afford not to keep up with things. So I look at that as an investment for my future that may not generate a direct return on investment, but if I don't do it, I'll quickly become irrelevant.
I like that question too. Thank you for that.
Yeah, as what you're saying, we have 4 fingers and a thumb. I like to use this with all my clients that I've worked with. Whatever I'm doing, is it making me money, saving me money, or saving me time? One of those 3 things. So I look at this with all, does this make me money? And I use that as a reminder that anything that I'm doing, does this make me money? And the podiatrist that I was talking about the other day, his time is in high demand. And he likes to help a lot of people. He likes to do a lot of different things. And on top of it, he helps out these different groups of people from all over, from South America and so forth. And his time is in high demand. So he's got all these business ideas and he wants to do these training sessions and so forth. Goes back to that. And that simple little rule there is, does this make me money? Has helped him prioritize what he keeps his focus on time.
That's great.
Yes.
Ruth would like some clarification. When you say 90 days worth of cash in the bank, do you mean 90
There
days?
we go. I didn't think we were going to slip that one through.
Do you mean 90 days worth of estimated revenues or COGS and expenses?
Well, cost of goods, that's a variable number that's going to determine how much business you're actually doing. I'm talking about your expenses, everything below the gross profit line, whatever that number is for your total expenses, times 3. Have 3 months worth of expenses in the bank to cover rainy day funds. Now that's a Tom Herald opinion, but it's something that's based on a lot of experience. I would like, as an operator, to ask Rob what your experience is on that, Rob.
I honestly, I always shot for 6 months.
6 months.
Just a comfort level with me. Stuff happens, and sometimes 3 months just isn't enough to turn it around. It's very, very difficult to get to 6 months, for a business, but that's what I always shot for.
Excellent. And I'll tell you, over the last 7-8 months, since March of last year, when we had the businesses start shutting down and closing their door for a while, many of these business owners were not prepared for this pandemic. Some were, some were not. Some have just expanded, but you've got to manage this. And remember what I said earlier when we talked about the profit and loss statement is your number one job operating a business is putting that CEO hat on, that entrepreneur hat on, is to make sure that you're in business to be in business tomorrow. You get to live to fight another day, so to speak. If you can't do that, you'll quickly be out of business. So whatever it takes, whether it be like Rob's model of 6 months, my suggestion of at least 90 days, whatever you have to have some fuel in the tank to help get you there.
We always looked at, what could go wrong? How long would it take to correct that? And so that answer is going to be different for every business. That, like I said, for me, the comfort level was always 6 months, but at a minimum 33 months.
Excellent. Yeah, I've seen a variety of clients, great businesses. And one thing that gets to be a misnomer, and understanding this, is you have to be real with yourself. And if you can't be candid and honest with yourself on your current status, you're going to end up really damaging your financial health for the future. Now, there's a couple of things I want to clarify with that. I'll give you another story with a client that we have. Built an awesome business, has 100+ clients coming through on a monthly basis. Pat does work on pre-COVID of doing things with children in a artistic environment, teaching them art supplies. And she'd been in business for 15 years and has built an incredible business where she's very popular. And we started talking about finances and how does this business make money? And she says, well, that's my problem. That's why I'm coming to you, is my business is not making money. For 15 years, her business has not made a profit. So that means net profit has always been either in the black or in the red, just not made money for 15 years. So I wondered, how in the world can you continue to do that? Well, she's got a very, very caring husband, and he makes enough money that he's able to supplement that. Now, the problem that they have, and I made that comment about it's going to damage you somehow, some way financially. They have 2 mortgages on their house. So here they are 15 years down the pipe, and 2 mortgages on the house that the house should have been paid for had they paid attention to this profitable business. Going back to the client that I mentioned starting off, $80,000 a month in revenue is a lot of money. And you can blow that $80,000 a month in a hurry. It's just a matter of zeros. You've got to be able to count every dollar coming in and every dollar going out. And remember, set yourself up. How much of this do I want to keep? The cash flow statement helps you do that. There's a phrase here called Ebitda, E-B-I-T-D-A. That's something that when you start talking about financial professionals and banks and so forth, it stands real simple. Earnings before income, or for interest, taxes, depreciation, and amortization. I put that on there. And by the way, we can send you all this in a PDF so you get all these slides. You can keep them as notes. But that number is a term that accounting types use your Ebitda, and looking at that, you're going to find a ratio. Now, I bring that up for one important point, and this is a huge element that I find that a lot of business owners don't really take the moment to think about. And I've got a buddy of mine who is the CFO for Bainco in Boston, and he and I have done a special on this where we've talked about exit plans and when is a good time to develop an exit plan for a business? Because a lot of business operators, they don't think about how am I going to get off the bus, so to speak. And I know I've talked to Becky and her husband Mike about this, and it's something that they're thinking about with their music store. But looking at that same scenario is think about this for your business: is what's your exit plan? What do you want to do with your business? Do you want to? The worst thing that you can do with your business, I will tell you, is to plan on your kids taking it over. That's a recipe for failure, time in and time out. But what a good recipe is do I want to keep my business until I get to a retirement age? Then what? Okay, well, that retirement age will come sooner than later. And the idea is that you want to have something that is worth something that you can sell. I've got a client that's in Clinton, and I love her to death. She's got a remarkable little boutique there. It's Sunrise Boutique. She's been operating this thing for 40 years. She's facing with that right now, and we put a whole team together to help her boost the value of this business and make it profitable, because she plans on working for a few more years, and her ultimate goal is to sell this business. Well, what's it worth? Well, we have to be able to document that. How do you know what a business is worth? That Ebitda number is how you know what a business is worth. You need to be able to prove that, and we're going to look at that over a period of time. Think about this. Would you buy a business that's not making money today, or last year, or the year before that? Well, if it is making money, you're going to look at those financials with a lot of conservative skepticism, and that's smart to be able to do it that way. Client that I have right now is buying an existing franchise. It's a gym, and we're looking at that Ebitda number over the last 3 years. But we're going to look at it even further. I want to compare that to the last year's worth of bank statements, monthly bank statements, looking at everything we possibly can to make sure that it's a good value it's a good investment for this couple to invest their time and money in. Think about that for yourself, and think about what your exit plan would be. Is as you're doing this, I want to sell my business. Well, if you do, what's it worth? Think about that. It's going to be worth a variable of that Ebitda. Now, here's that little boutique that I was telling you about. In her neck of the woods, the typical value of her business is going to be a 5 times return on that annual Ebitda number. So if she's able to show that business is generating $120,000 a year, her business is conservatively worth 5 times that amount as a payment system, not counting real estate, but that's what the business and the brand is worth that she's developed over time. Let's look at a cash flow statement. This is the formal side of it. I mentioned briefly that there's 3 sections to a cash flow statement. One is the operating activities, and looking at that comes directly off of your profit and loss statement. It's net cash flow basically from your P&L. But this middle area here, you can't see my cursor, but the middle area there is from investing activities. Investing activities is if you think about it like this, and I like to use car dealerships. I've had a lot of car dealer clients. If you needed $20,000 to pay bills on, or you have a need for cash right now, and you need to come up with $20,000, but you only have $5,000 in the bank, where am I going to get the other $15,000? Well, the first thing you want to do is liquidate some of your inventory. You do that to get cash in the bank. That would be what's called investing activities from selling some of your assets. Same thing right now. If you needed to get cash, where would you go? If there's no family to borrow from, you might have to sell some assets. Some people even have to sell their homes right now, or take a mortgage out on their home. So if you sell your home, that's one category. But if you take a mortgage out on your home, that would be in the financing activities as short-term debt. That would be here, unless you want to completely refinance it because the rates are great right now. Then it would go to long-term debt. The difference there is I like to say is a 3-year note, being like a note payable that you have to do 3 years or less, or for a long-term debt being 3 years or more than 3 years, more like a mortgage that's there. And at the bottom of a cash flow statement is going to be basically what the net increase or decrease in cash is. The point that I want you to know here is if you need cash, there's multiple ways to get it. You can either go to a bank or go to a loan shark. And here's something that's important for you to know about commercial lending. We have, for personal lending, if any one of us wanted to go to a bank right now and get a car loan or a mortgage for a house, there are very strict rules and guidelines what that lender can say and can't say. There's several federal laws and state laws that dictate what they can, how they have to treat us. But if you go in to a commercial lender, it's a whole different ballgame. There's no watchdog for you, and they can basically charge interest 23, 24, 25% interest. And I mean, they have some restrictions, but it's much less than what's there for consumer finance. And it's out there right now. And I will share just a brief story that so you know. And some of these businesses out there are not your friends. I'm a pro Amazon guy. I think Jeff Bezos is pretty ruthless, but he's a very creative entrepreneur. I'd never recommend going to him for money. They have got a lending program for businesses. And his business model is completely unique. There's a reason why he's the wealthiest man on the planet. They loan money. Actually, first what they do is that if they like your service and you start selling a product on their platform, they know how well you're doing. They'll find out and see if they can get it made cheaper, whatever product that you're selling. If they can, they're going to become a competitor of yours. Oh, I noticed that you're selling really well, $50,000. They've got a whole team that will come to you and say, how would you like to have a loan for $150,000? Well, any one of us look at that. Oh, wow, we're going through a pandemic right now. I'd love to have a loan for $150,000. They say, well, it's low interest rates starting off like the credit card companies would do. We'll start off, it's going to be a commercial loan at 8, 9%. But if you start getting into financial problems, that interest rate goes up to 20, 23%. Had a business operator in Marlboro that was in business for 10 years, had a brewery there, doing wonderful, started selling the home brew kits on eBay, doing very well, got fat, dumb, and happy on that, and thought was going to carry him to the promised land. He signed up for one of these loans, and it put him in such a bind, paying 28% interest to Amazon. Just telling you guys that because there are people out there, and to me, I like to look at that. I get a deal that, if you ever watch The Godfather, to me, that's the type of deals that they're making for you. That commercial lending is the Wild West still. So the best loan you can have is the one you don't need. And I promise you, as a business owner, the banks aren't your friend. They're not going to loan you money when you really need it because they don't take risks. Be able to drive the terms by managing your finances so you don't actually ever need a loan. You go to it when you want to plan for something in the future and you've got another way of paying for it. But I would recommend that you look at these 3 documents and be very conservative on your financial forecasting. Which gets me to a point, and I want to drive this point home for you guys, is to make sure that you look at 2021. We're in January right now, and just rhetorically put this rhetorical question to all of you. What is your budget for this year? If you don't have a budget worked out, define what you want for a win for the year. You back out how much money you want to get paid from that. And setting this out, and there's a rule for that, for setting it up as what's called a SMART goal: specific, measurable, achievable, relevant, and tied to a timeline, time phased. So that goal that you set up for defining the win needs to be a SMART goal. What is that dollar amount that you want to make for the company? Factor out how much money you want to make as a business owner. Factor in your expenses. Have them itemized, and then ultimately get to what you need to have for a monthly revenue item. I got a client that right now that has got a startup trucking company. He took it a step further, and he's looking at his revenue. I just happened to know, I was talking to him last night. $12,000 a month is his revenue line for a startup business. That's pretty aggressive. He wants to do that on a weekly basis and look at it at $3,000 a week. He says, I can do $3,000 a week, but $12,000 a month is a little harder for me to do. I look at that, and it's his mindset from it goes right back to going to the gym. The best way to eat an elephant is one bite at a that phrase, looking at that, it's easy for him to look at it on a weekly basis and keep his focus on that $3,000 a week. And if he does that all the way through the year, he won't have any problem achieving his goals. And his goals are pretty aggressive. He wants to pay off his fleet of trucks that he's got. He wants to add 2 trucks to it and have them paid off. That's pretty aggressive.
Tom?
Yes.
Diane wants to know, Uber has yet to turn a profit, yet it's valued as a multi-billion-dollar business. Is there a better metric to use for companies that pour their gross profit into expenses to scale growth?
Well, what Uber does is a whole different world. When you start getting from a company that's private going to public, there's a reason that they want to do that. And I'll ask rhetorically, but if I'm the CEO of Uber and I don't want to share all my profit with my stakeholders, then what I might do is keep my gross profitability down, because when you go public, your people that own stock in the company, you have to pay dividends. So on these financials, there's creative things that MBAs from around the world that they know how to minimize the payout and increase the value of that company. So that market capitalization, what people are willing to pay for, that's a whole different world than what we're dealing with in small business. Pro forma, that's a fancy word to mean forecast. And there's a couple things that we look at. Now, we know what hindsight is, and I think I heard a joke the other day about this, that at New Year's Eve this year was the first time we could actually say this, hindsight is 2020. Well, when we look, that's a bad joke, by the way, but when we look at that scenario and we're able to know how well our business did pre-pandemic, how well did you do in 2020 during the pandemic? How well are you planning on doing it in the future? There's a lot of assumptions that go into that. And I spend a lot of one-on-one time with clients to be able to justify that and really think our way through it. When you look at these assumptions and you're making a hypothesis, that's what a forecast is. But a lot of people are applying for loans right now with through the SBA, either SBA-backed loans with banks for paycheck protection or EIDL loans, and looking at that, and they haven't really put together a good forecast. But I will tell you this, going back to my comment earlier when I was saying about banks wanting to make sure that you're a good steward of the money, they're not going to take risks. They want to make sure that if they loan you money, that you're going to have the ability to pay that money back. Now, I don't want to keep picking on you, Rob, but you've got 2 different types of businesses. You can probably testify to that, right?
Oh, absolutely. When we were the large organization, banks wanted nothing to do with you when you weren't having a good year and needed the money. So your comment about if you're going to borrow money, the best time to do it is when you don't need it. That is spot on. In my small business, we never got to a profitable position. So banks weren't really interested in talking to me at all. So I agree 100% with what you said.
Well, the way that we get a bank interested, or even, if you're applying for a grant, this is something to consider too. If we're the keeper of the grant, and I found that working with nonprofits and writing requests for proposals and so forth, that when we do that even if I'm a nonprofit, I need to prove to them that I'm going to be a good steward of the money. I worked for the MLK Center in Worcester for some time, and we applied for grants. And we had one of the people that had, there's several foundations in Worcester, and we had applied for a grant from one of the foundations. And the director of that foundation, she said to me one-on-one with it, she says, Tom, there's only so many bites out of the apple. And I need to make sure that if you guys take a bite out of the apple, that you're going to be able to feed a lot of people with that, so to speak. That was her little parody that she gave me on it. But it stuck with me because the same idea applies with nonprofits as it does with for-profits, and how bankers look at businesses. They want to make sure that if they give you a $50,000 loan, that they're going to get that paid back in spades, that you can pay that loan back. And what are you going to do with that loan? So as simple as this sounds, is I need to prove to them that I know what I'm going to do with the money. I need to know exactly how much money that I need. And that goes back to that forecast. So we're in 2021. I have growth that I want to get through right now. I know that I need $50,000. Well, of the $50,000, my plan is I'm going to get a $5,000 grant from the city. I'm going to get a $20,000 line of credit with the bank. And then I'm going to put $30,000 in it myself. Well, that kind of a scenario, when you start looking at that, the thing that adds a lot of validity to it is when I say I'm going to put 30,000 of it in myself or 25,000 in myself, that I'm covering at least half of it myself means I've got some skin in the game. That's got a banker's attention. They're going to look at me a whole lot more. Now, if I go to the next step, I say this $50,000 that we have, with this, we're going to be able to boost our sales this amount of money. So I'm going to put this nice pro forma out there, and it's going to show an increase in sales throughout the year when I get to December of 2021, where my sales or my revenue has increased by 20%. Well, yeah, right. You got to look at that skepticism that comes with it. Yeah, right. I got to be able to answer that. And when they ask you a question, well, how are you going to do that? Well, based off my metrics, I know that if I talk to 10 more clients, that typically what I'm going to have, I'm going to hire somebody to help me do business development. That person is going to set more appointments up to me. And as a result of that, every one of those we're able to set so many appointments with. I meet them face to face. And of the ones I meet face to face, I'm able to gain as a customer at least 1 out of 5 of them. So we have some kind of historical metric that we look at that answers those questions. That's the essence of writing a business plan down. That's all that it is being able to answer those basic questions. Yeah. Sometimes this thing will freeze, so let me wake it up. Yes.
While we're waking it up, Miriam wants to know regarding starting a business about equipment, software memberships, etc., that are her initial investment. Does she need to prorate for the year?
Re-ask it again, because there's a lot to that question.
I have a question: starting a business about equipment, software memberships, etc., that are her initial investment. She wants to know if she needs to prorate for the year.
Okay. Software memberships, is that paying an expense as a business?
I can explain. So
Okay.
I am, it's for 3D animation. So I have a number of software. Some of it is an initial cost that covers me forever. And some of them are yearly and they're
Is
expensive.
that CAD software?
No, the Houdini and Maya and all this software that I need to make the videos. Now I know how much a video, the average cost of a video right now, and it's about 25,000 per minute. So that all these expenses have to come into the cost of the video of each that I make, right? And it's my labor. And sometimes I will subcontract if it's a larger project. And I have subcontractors lined up.
So you want to know if that expense, that line item expense of it's something that you should prorate.
Right. So that goes under my expense. Also the equipment. I have I did an initial purchase of computers. So it's a great setup. It's all coming from I'm not taking any loans. So it's coming from my personal investment, which I'm able to do.
Okay. Well, the terms on buying this, let's stay at one step at a time. The terms on buying the license for the software, are you buying a license?
Yes, but it is yearly. So it is not forever. It's the license to use it for a year. It's yearly.
How do they charge you for it? Do they allow you to pay for it monthly, or do you have to pay one payment at a time?
One payment at a time for most of them. Yeah. Okay.
That's a good question that you would want to work out with your accountant, your CPA. I want to bring a note back to that in a moment. But what you want to think of is, if I'm on the cash basis, then it's going to be, you're not going to prorate it. But if I'm going to be on an accrual basis accounting, then I am going to prorate it. Me personally, I would put it on the accrual basis and accrue it over the period of the year because it's an annual expense, and I'd want to disperse that. Same thing with depreciation on any kind of asset that I buy. You want to lower how much money you have to pay in taxes over time. So once you get there, we pay taxes annually. So that's all something that's going to have to be there throughout the year. But looking at that, making sure that I've got that amount to lower my tax liability, the CPA will be able to help you. Side note to that I wanted to make sure that you guys know is I see this a lot, and I've done this, and I learned this the hard way, is you can get somebody to help you with QuickBooks. You can get somebody to help you with bookkeeping and doing lots of ledger and journal entries and all this stuff. And they could even do a good job. But there's a difference with having somebody help you do your books and then having somebody with the shingle of CPA on it. If you have a CPA that helps you with your taxes, that's the most important thing you can do with any of your financials, is anything that you submit to the IRS, have a CPA submit it for you. When they put their stamp on it, should you ever get audited, they are going to represent you to the IRS. They're putting their stamp of approval and making sure that every T's crossed and every I's dotted. And to me, that's a good litmus test to determine whether or not the CPA is backing me, is whether or not they're going to put their name on my financials.
Right. So I do have an accountant for my personal finances, so it could be the same for my business, I suppose.
That's correct. Yeah, it could be the same. I like to have the same person because they know my business, and that it's important to have a good partner relationship with that CPA. Your banker and your accountant need to be two of your closest business partners.
Okay. Yeah.
All right, I've got just one more slide for us right now, then we can go into a quick review of this. Talking about finance, that could be a whole nother class by itself. But when we look at finance, it's basically sources of capital, and there are basically two sources of capital. And you think about this, if starting up a brand new business, where can I get money to open up? Well, the first thing you want to do is friends and family, or some kind of retirement fund that people borrow from their 401k, or they borrow from money that they've saved up. If you borrow from yourself, it's good to loan money to that business entity, and that money gets paid back over time. Even though it's coming from you, I like to carry it as debt, not debt. The company's going to pay me back over time. The other way that it would be is equity. So equity financing and debt financing are two different avenues. When you start getting into equity finance, that's where you're dealing with angel investors, you're dealing with venture capitalists. And ultimately, when the idea is, when we talk about an exit plan, a great way to look at this is to have a successful company where you have a private equity company that wants to come in and buy you. That's the ideal win for a scenario. So when you do that, you need to have your financials in line. They'll come in and there's a big payday for you. Then you get to go somewhere warm and having umbrella drinks. That's a fun thing to do for a business, for all the work you've put in over the years. One of the goals that I have for the lady that's in Clinton is to help her get to that point. Now, when you look at either one, whether you're talking to a banker or an investor, they're going to look at these 5 C's. It's the same thing for both of them: character, capacity, capital, collateral, and conditions. Character is your character as an operator, your character as a person. And just like you might think, it's how well you've paid your bills over time, how well this company has paid its bills over time. Just like we each have an individual credit report for commercial or for consumer lending, businesses have what's called a Dun & Bradstreet, and I think there's 2 or 3 others that are out there, but they have a credit report too. And they're rated on that once you've been in business and you've had credit. The idea is you don't want to have so much personal guarantees on your loans. You want that business entity to gain its own credit report and be able to stand on its own. As you've been in business over time, it should be able to have its own merit for obtaining loans in the future. Capacity is just like it sounds. It's your ability to repay that loan. So if I'm a brother or a cousin or an uncle or somebody in your family, I needed to borrow $10,000 from you, would you loan it to me? Well, it depends. It depends on my history of paying people back. That's my character and my capacity. So what am I going to do that? What am I going to do with the money? Well, what am I going to do with the money represents part of the conditions. and you would want to take the time frame out for it. But you also want to find out, well, if I'm going to open up a business, how do you pay me back? That's the capacity side. Can I afford to make the payments that we agree upon back to me? So bankers will look at this. This goes back, predates models and so forth. Long before we had financial modeling, we had these 5 C's. So the capital side of it, looking at the item for capital, that's looking at basically how much money you're going to have, how much skin in the game. Going back to the scenario that I talked about, if I had $50,000 and I'm putting up 25,000 of it, the bank's risk is a whole lot less. They don't want to have any risk, but they want to make sure that I have skin in the game. It's a whole different scenario if I'm going to them and I say I'm putting up $5,000 and they're putting up 45. They're going to be a lot more leery and they're going to dig deep looking for reasons to say no. Collateral. What am I loaning the money for? This $50,000, is that for buying equipment? Is it for buying a truck that I need to do some stuff with? Is it for buying software? Now, when we had Miriam's question about software, if that software is not cheap, right? If I had to loan you money for it, if you can't pay me back, there's no collateral for me to repossess. But if you're taking that same amount of money and going to buy a vehicle with, I can go repossess that vehicle. So loaning money for a vehicle that has a market value that I can liquidate helps reduce that risk. That's what the collateral item is. I'll touch briefly on conditions going back to that, but the time frame, if you were to look at 2020, every banker I know has tightened their belt. Every banker that I know has basically taken it and they said, you know what, we're going to be a whole lot more conservative on any loans that we have out there. Even with the SBA upping the ante and saying, I will guarantee 100% of this loan, the bankers have been very conservative on the types of businesses they're making loans to. This is the review. Talked about current financials. That's right now in the snapshot of time for the balance sheet and going over a period of time, ideally for a month with the profit and loss statement. Pro forma financials, that's looking at your forecast. There's a lot of assumptions that go into that pro forma, but being able to have that where you have a good, clear forecast, it gives you more than just a goal. It's able to take us for the year, what defining the wind's going to be. And I break that down into monthly increments and ideally into weekly increments. And if I do that, I'll keep my focus on hitting those revenue marks. I should hit my goals. Net income, the difference between that and gross income, and then ideally looking at the ratio between net income as a percentage of gross income. Ideally, you want to be able to keep half of the gross income that you're making. 40 to 50% is a good mark for you to look at. If you're not keeping a large chunk of that, you're making a lot of money for a lot of people. That's very disheartening for a business owner. Understanding the relationship and differences between cost of sales and your expenses and how you look at that's going to help you identify metrics for managing your business. You have to inspect what you expect. And if you expect to have a profitable company, well, you have to inspect it on a very routine basis. And then lastly is looking at the difference between finance and accounting. Finance is your source of capital and accounting is the ability to count all the dollars that come in the door. Covered a lot of ground, went through a lot of things. I don't want you guys to feel like that you're taking a drink from a fire hose, but you've had wonderful questions and I'm glad that you were able to ask those. I'd like to open it up right now. And like I said, it's informal. So if you have some questions, let's talk about it. And if you wanted to meet me offline, my phone number is right there. That goes to me all the time, wherever I am. Actually rings to my cell phone, and that's my email address. Or you can get with Sarah at the office here. The office phone number is 508-793-7615. And Sarah will be able to get me, Rob, Cheryl, Rich, any one of us to be able to get on the program. Last thing I'll say to you is we got a really good team of graduate students at the Graduate School of Management at Clark. And they help us out routinely. I've got 40 students this spring semester coming up that's going to be in a class of mine, and they're each one going to have a project working with entrepreneurs and businesses just like you guys. And if any one of you are interested in that, reach out to us and you get a really good, talented team helping you with financial forecasting. Any
Tom,
thoughts?
thank you so much.
Well, Jessica, I'm glad you had some good questions there.
Oh, I'm just getting warmed up. I just don't want to like take the whole session over. I've been reining myself in the whole time.
Well, it's good hearing from you. Chris,
Well,
I would like to hear about your gardening business, and do you have an elevator pitch for us? Put you on the spot with that.
Oh, goodness. Well, there's never been a better time to start a garden and have a little control over your food supply for sure. But there's so many reasons that people do this. You know, it's fun. They connect with nature. It's very, very satisfying to grow your own food. And more, I heard that comment from a kid in one of my cooking classes just the other day about how satisfying that is to grow and prepare food from your own garden. I think one question I have, and I think that gal that taught art classes, and I probably share this struggle. The reason that I don't have one of the reasons I don't have a great handle on my numbers is because there's definitely a goodwill element to a lot of the projects that I do. And I don't know if that ever gets quantified anywhere. I don't pay
On the goodwill that you do?
Correct. So I spend a lot of time with boys and girls clubs. That is not super profitable, but I wouldn't give it up for anything. It's the most satisfying part of what we do.
The Boys and Girls Club, they make a lot of money. They're very profitable nonprofit. You know that, right?
A profitable nonprofit.
Then they make a lot of cash flow. One of the best run businesses in the world is the Red Cross, one of the largest nonprofits, but they have a lot of free cash.
Mm-hmm.
They own properties all over the world. They're very well-run businesses. I'm saying that just so that you understand that charity is one thing, but operating a business to be profitable is a whole different thing.
So I think you're telling me I probably should consider charging more for those projects than I might.
Do you offer value to them, to the Boys Club?
Absolutely.
All right. Do they have a good mission?
Does who have a good mission?
The Boys Club, Boys and Girls Club.
Absolutely.
I agree with you very strongly.
Absolutely.
And it goes back to what we were talking. Yeah, we were talking about with that profit and loss statement. What would life be like if you didn't offer services to them? Or what would life be like if they didn't exist? It would not be as good as it is. So we need to be able to live to fight another day. And to do that, you need to be profitable.
Right. Right. But it makes it squishy because there's, each project, I kind of look at it and say, what is the sort of goodwill value of a given project? It's not standard. My business model is such that I charge more when I can. So I charge more for people whom I teach as a luxury. It's a luxury to have someone come to your house and teach you how to take care of a garden. That's certainly a luxury. The way people come cut their lawn or, do other maintenance around their house. So I charge those folks more and I charge folks like the Boys and Girls Club less. Is that a good strategy?
Well, it's charitable. I like that, but if you can afford to. Now it goes back to that. How much money are you making on the gross profit? Can you afford to do that? You've got to be profitable to be in business, to be able to offer that service to them. I think with what you're saying with the gardening, I've got these, and I'm really blown away by this new Generation X what Generation Y, I think they might be called now, but they're really into sustainable development and want to be farmers and looking at making money with farming and just the need that's out there in urban areas too. Yeah. So somebody that has just a little small patch of ground, teaching them how to make things that's organic and, like you said, have teaching the knowledge to the kids and passing it on to one another is important to have.
Yeah, it's very inspiring. It's very inspired work. But so I don't know, is there any place in a financial that quantifies goodwill? Is there any place for that in financials? No. Okay, that answers my question. Thank you.
Anybody else? If you want to talk about your business or if you have a question, it's a great chance to, I'd love to hear and learn about you.
Tom, I do have a question. I have so
Just a
many,
minute,
and
Karen.
I'll message you later.
Okay. Karen, did you have something?
I did. My name's Karen, and I am somebody who does financial coaching. I teach people personal finance, how to get out of debt, how to manage their household, how to live through a pandemic, and the basics of budgeting to them so that they can sustain their households and live without the fear of losing it. So,
Do you help them at all with accounting?
their basic personal accounting, yes, not with businesses. I don't want to deal with businesses. It's just not something I want to do because I'm only doing it part-time. So I prefer to do it just personal finances with families. So.
Well, very good. Thank you for that input.
Yeah, and if anyone needs to reach me or knows somebody that needs help, my email is the word YWHYRU. So the letters RU in debt at gmail.com.
Why are you in debt.com at gmail.com?
Yep.
Can you put that in the chat so we can make a note of it?
Sure.
Not miss it? Sorry about that, Jessica. You had something you were going to say?
Oh, sure. No problem. I had one question, and I'm happy to share a bit about my practice as well in a minute. The question I had is there a place I can look to find out more about continuing education budgets that larger health institutions might have? Health institution could be hospitals, physical therapy practices, those kinds of things. Is there kind of a metric I might expect? This is in terms of looking for pricing for my own classwork that I'm going to be sharing with them. But wondering, the main thing I want to make sure of out the gate when I'm doing my RFP is to minimize obstacles for myself on getting a yes. And one of them, I'm considering targeting continuing education budget as the way that people would pay for my services.
Well, to answer you very specifically, that would be something that I would love to assign a student or two to help them do some homework and research. There's a lot of information out there and they're very good at researching. And that's something that I look at and I consider knowledge is power. So the more time that we have to be able to do that research, the more knowledge we can gain.
Sure. Okay, very good. Well, I'll keep that in mind. And I think it would be great fun. That said, as far as my background is concerned, I've been in practice for 15 years as a neuromuscular therapist. And what that means is I primarily help people get out of pain. And I call myself a muscle detective. I've been interviewed on the local radio station a couple times. And what that means is that sometimes it's not the place that you feel pain that the pain is actually coming from. So you got to kind of figure it out sometimes, and it's not always obvious. And that being said, where I've found my work to be somewhat unsatisfying and insufficient is only being able to work one-on-one with patients that can afford it out of pocket. And many people, especially right now, are hurting financially, which is why I'm so compelled to share what I know with people who can bill for insurance, Medicaid, and Medicare. And the programs I've developed fit into that model of wellness, which I'm really excited about. So I've been teaching already. Before the world shut down, I was teaching in person, and I now teach virtually, even if you can believe it.
Your business, are you certified as a woman-owned business?
Am I certified as a woman-owned business? If there's a certification for that, I don't know about it, and I'm not.
Well, there is a certification for it, and it's something that I strongly recommend that you do, and it will help you gain access to some state grants and some state contracts for doing what you do, particularly if you're helping young people at the boys club or girls club, wherever that might be.
Oh, that's for the gal that does the gardening. I haven't, in terms of the pro bono work that I do, I keep 3 slots every month for patients, not 3 hours, but 3 actual slots on my schedule. I always, even all the way through my practice, I've always offered services. I make folks pay me something. So if they're artists, I have them, give me a piece or something like that. We come up with some arrangement that's affordable for them. But the way that I help people that may or may not have the ability to pay is I'll make a case study out of their sessions and have them do a lot of reporting on the findings. I have one woman right now who's paying me with eggs. She's a farmer, and she, in exchange for working on helping her with her fibromyalgia, she gives me dozens of eggs or makes me an apple pie or something like that. But my work is more one-on-one on a case-by-case basis, so I don't have necessarily a way to document or show working for a bigger organization. But
Excellent.
a question for you is, where would I get certified as a woman-owned business?
Set up some time with me or Rob, and we'll help walk you through that and get you paired up with Sandra Ledbetter.
Great, thank you, Tom.
Ruth, you had a question?
Hi, everybody. I just wanted to say the class was great. I know nothing about accounting, but now I know a little bit. Thank you very much. I look forward to joining another class if you have one. I am partner with a cleaning business. My husband and I have a cleaning business. We're partners. We do commercial and residential cleaning. And we have very good reviews on Google. We're AKM Cleaning Services. So if you'd like to check us out, I'd appreciate that.
Can you put that in the chat?
I can do that.
Well, thank you very much. I love hearing that. You made me think of something there. We're learning at the SBDC in the state to do these classes. Since we're not meeting face to face with clients, we're meeting virtually. And there is a routine need for basic accounting, basic marketing, sales training, anything that's out there on how to operate a business. So we're doing these classes for free, and it's there for us to be able to offer our services in a way that you guys can get. Now, we don't charge money for it. That's something that we have QuickBooks classes. We're not even charging for that right now. But what we do instead is you're going to be sent a survey. Those surveys matter. And if you like the class, please give us a good rating. If you don't like the class, forget about it. Just delete the email and don't worry about it. But the feedback that you give us is a way that we can actually learn to improve things. And I personally would love to have some feedback from you guys on what you're looking for in the forms of training, because we've got resources with accountants, with attorneys, HR laws. There's so much knowledge that's out there to be gained. And I need to make sure we're tailoring our training to your needs. So would love to have your feedback on it.
Tom, can I give you a little bit about my background? And
Oh, please, I would love to know that, Miriam.
As I said, I'm starting in this new business. My background is in science. I was a scientist before. The last 2 years I've spent just training on how to make videos. So I was at Noman, the best entertainment school in the industry. So the reason for doing that is I want to give my videos a very organic feel, not something plasticky or Lego-like, but almost like you see in the movies. So my clients are going to be biotech. And I signed up to start going into the Cambridge Innovation Center space. But right now, because of COVID, nobody's there. So my networking is limited right now. So I figure I should do planning at this stage instead. Knowing about numbers helps me a lot, because when I have a number, I can project how many people I need to sign up, how many contracts I need to have a year, and how much I need to hustle. If I have big contracts, I could have 4 a year and I'm set, because if they're larger contracts, they could be $100,000. Like I said, every minute of a video is about $25K, and it varies from $5 to $50K depending on the company. The other way I want to generate business is making my own videos. So I'm working, for instance, with a scientist, and we're working in this organism called tardigrades. She doesn't have she's spending her own time. She's a scientist, so she's advising me. I'm also a scientist, so I understand, where she's coming from, but I'm doing all the legwork. And eventually, where I want to take this to is probably a YouTube video or a VR application that generates royalties. So that's the two types of revenues I would like to have.
there is a high demand for those services right now at the university level. I was talking with an instructor at Harvard Business School doing the same thing that I'm doing. He and I are both adapting to this word called asynchronous education. And what that means to an old guy like me is I got to be a YouTube star. And they have tools out there to basically present a lecture asynchronously, so these students can look at it on demand, basically. And the quality of video that I can produce is horrible compared to what a professional could produce. So the need is high at any one of these universities that are there.
Yeah, so getting clients is one of the challenges I will have initially. I think once I'm set, word of mouth works very well. Because I was doing part-time illustrations, and somebody found out I was good and they referred me to Harvard, and I did a coloring book for them 2 years ago. So I know word of mouth will eventually be the way that I connect with people. Right now, like I said, I'm going to start with CIC, the Cambridge Innovation Center. When it's active, it has a lot of people there. It's like a hub for biotech. Connections in universities, I don't know how I will reach that market, but definitely something I want to look into. I was thinking biotech might have more money right now initially.
Well, I would love to meet with you one-on-one if you can plot out some time and learn more about what you do.
I would love to, because I think just hearing this talk, I learned so much. And like I said, having a handle of numbers will help me also plan how much I need to work in getting customers, clients.
Well, thank you very much for your input. I truly appreciate it. And Sarah up there, if you want to get with her, either by email or by a phone call, she'll get you on one of our calendars, and we'll be happy to work with you.
Oh, that would be great. Thank you.
Tom,
Yeah,
I have a
think-
question.
Yeah, go ahead, Leonel.
Yeah.
Can you pronounce your name?
Yeah,
Mary? Oh,
Leonela.
Leonella, that sounds beautiful.
Yeah. Yeah. So I have a question. I've been working in how I can charge for my hour, and what you guys says, like how much the market can bear. I'm a teacher. I've been teaching for 20 years. I taught in Framingham Public Schools. I taught in international school. I have a lot of experience. And when you go to a language program, they pay $25 per hour for a teacher. And I was teaching at the university, and they pay $40. So in our industry, the pay rate, it's not high. So how much can I reach or get into the market? Because I think I would love also to raise the bar in the market. You know, I'm not only a teacher, I am like an English trainer. I help you to be who you are in English. You know, so you speak Spanish as a native language, I help you who you are, you know, to express yourself and access to a network in English. So that is, I help you with your, identify your limiting belief that don't help you to speak fluently. You're already a professional in your own language, you know, so you know a lot about a world. So how do you charge for that?
Well, the first thing that you do, I love that question. It's a lot of questions in that one question, but it's like what Miriam was talking about is you've got to invest in the most expensive form of advertising, and that's word of mouth. And you want people to know you, and they're going to know you and tell other people about you. That's what word of mouth is. But think about what your personal brand is. Right now, this is the first time I've met Miriam. It's the first time I've met you, Jessica, all of you, or many of you. I know some of you, but that being said, what is your personal brand? So if you look at that, ask people that know you, what are 3 adjectives that you would say about me? What are what am I an expert at? That's the foundation of what your brand is. And if you like that brand, continue working on that. The other part of that is developing relationships with people. And I was reading this morning, I read and I write a lot of different blogs and so forth and listen to podcasts. And one of the things I was reading today where it was talking about, we focus much on business planning, on looking at the vision statement and the mission statement, when in reality, there's a new book that's out. It's Jim Collins has got a new book, and that's what I was actually reading. But he was talking about relationships. If you define somebody's success over life, it's the quality and quantity of the relationships they've developed over time. How, you know, they basically, do people stay with you? And the other part, if I live my life according to my core values, those two factors are really important. But I like to tie that back into your personal brand. We connect with people. We're connecting right now centered around accounting 101, but a lot of our conversation is not around accounting. It's just about personal human connections. And I think we've all got the ability to help one another, and we all have something to offer and bring to one another, and that's community. Well, think about your brand within your community. And when you do that, you want to become a point of reference. Now, for you, I don't know anybody that does English as a second language instruction, but I will remember Leonella, and I want to know how to refer them to you. And I think many people on this call would feel the same way. More of this.
Okay, great. And could you repeat the name of the book you're reading about?
Yeah, it's a new book by Jim Collins. Jim Collins wrote Good to Great, and this is called Entrepreneur Now, is what it's called.
Okay, great. Thank you.
Rob, Colette, did you have something you wanted to ask? I know we missed a comment a little bit ago. If you can unmute. In the bottom left-hand side. There you go.
So I got two computers. I'm using the mouse for the wrong one.
That's okay.
No, back in May, I started a business with my brothers, LLC. I started working with Richard Channing. So really my question is a little bit more focused. I'm trying to understand the profit and loss sheet. My brother was doing the accounting for it. So trying to get a better cost on the cost of goods sold. We're electricians. So if an electrician did work, I can understand I'm paying, count the materials he used plus his labor. Whereas we're being an LLC, we're not getting paid. Does that still fall into that category? Because we took some money out of the account, and at the bottom of our profit and loss sheet, it shows up as owner distribution. So if I put it,
you're talking about paying yourself, right?
Yeah. So we're not paying ourselves per job. We just at some point we took some money out, and it shows up as a separate item. It doesn't show up. It wouldn't show up under the cost of the goods.
And you said that you're an LLC?
Yeah, so LLC with three brothers, so technically a partnership. So
well,
we couldn't.
I absolutely would have a sit-down meeting with your accountant, and what I mean by that is you need to factor out your cost of what's it cost to do a job, and cost those jobs out effectively. If you were working for Tom's Electric Company as Rob Collette, how much would you want to get paid for a job?
Well, we have that. We bill it when we do our billing and costing. We have that number. We always figure out, well, so if I don't do the job and I have to hire someone, that's how we figure out our billing. So we do it in our billing. I just don't know if we how that tracks into this, because I'm not actually billing it. So is that number not really?
Well,
maybe it's not understanding the spreadsheet because I didn't put the data in. My brother put the data in.
That's a great question. Oh, you're not on payroll, are you?
We're not on payroll, so we're not. It's our payroll doesn't come out except for as like at the very bottom what we take out at the end of the year.
Well, right there answers my question. I would get with a payroll company and pay yourselves through the payroll company. So you have two different hats that you wear with the company. Hat one, you're an employee doing the work in that company and you get paid for that. Hat two is you're an owner of that company. So at the end of the quarter, at the end of the year, you're going to have profit that you can take home as owners of the company. That profit you take home is an owner distribution of profit. But the other money, getting paid for the jobs, you're going to want to get paid for the jobs. Now, what that's going to do is lower the amount that you're taking home as a distribution, but it's going to help you tax-wise. Long-term, that's an important thing to consider because we all want to pay into Social Security, assuming that there's going to be Social Security when you retire.
Yeah.
And as opposed to self-employment penalties that are there. Get with your accountant and get on payroll.
Yeah, that's kind of where we are. A couple of them said we should look more into the S Corp rather than what we're doing, but they said once we convert, you can't go back.
S Corp, LLC, it's not that much of a difference. The difference between the two is what your exit plan might be. If you want to sell a company, it's a little easier to sell percentages of it as a corporation. And it's less per year to register with the state.
Yeah, because at this point, we all have other jobs. So this is like a side job. Building this up maybe to the point where we can leave our other jobs. So we're not in that same position where I'm not critical about it. So our business plan really is really hard to manage because we have X amount of time to put into it until we can balance that bridge of swapping over. So I'm looking at it's like, well, since May, we bring in 108,000, but our net profit line is 3,000. So it looks like it made nothing, but it really was like a building year to just build up the brand and build up our equipment and our supplies. So right now we're in a position where we have everything we need to go in without a lot more, investment. We're trying to do this all without taking out loans, so we don't have to deal with anything like that. So, theoretically, I could close the doors tomorrow and not have anything to worry about.
Well, I tell you, the cool thing about doing accurate financials is when we know what the financials are, and you look at that first profit and loss statement, I don't need to coach you. I don't need to tell you anything. You're going to know what an A is, what a B is, and what a D and an F are. You're going to know how well you and your team are performing. But the hard part is making sure we have everything set up properly for accurate accounting.
Yeah. So that's kind of where we are right at this point. We have everything. We're doing the accounting ourselves because we're just the three of us, and we're doing it ourselves. Is what do we want to do differently in 2021? And the sidekick to that is I also have my own sole proprietor that I run off to the side, which I started last year as well, but 3 months before. Actually, I started the end of 2019, which I just kept track of everything because it was small. I kept track of everything on Excel. But then when I started to talk to the CPA on getting everything together, because I was like, there's no way I'm going to do this, my taxes myself with everything that's going on. I was like, ooh, I got to think of a little bit different plan of tracking this for next year. It's kind of why I was doing this, and trying to understand exactly what I was doing right, what I was doing wrong, and trying to come up with these numbers.
Well, I'm glad you came and joined us today. Thank you.
You're welcome.
Luciana, did you have a question?
Hi, yes. I am a photographer and I haven't been profitable. I have an LLC for the last 3 years, and this is the first year they actually made money. Last year, 2020. My question was, if I want to, wasn't a lot of money left over after paid expenses. So if I want to leave the money into the business as a buffer, can I do that? Or if it is any profit on the end of the year, I have to take as a owner's distribution?
You can, there are no rules when it comes to that. It's up to you what you decide to do. I recommend that you leave as much money in the business as you can, because that's a great place to keep that money. Now, it depends on what you want to do with this company. Where do you want to take it? How long do you want to keep your photography business? What's your exit plan?
Well, I don't have one yet. I was just trying to work on make it something I can make my full-time job, that I can pay myself, because that hadn't happened until the end of this last year.
Well,
so I guess that the plan it is to make good enough so you could sell in the future, but a long future, I guess, because that's what I want to do as a job, as a full-time job.
I would love to have a scenario for you and Rob both where we could help you, where that becomes your full-time job, where you can be your own boss, so to speak, and build some wealth and sell something down the road from now and make a lot of money. I
Awesome.
like to make a lot of money, have a lot of fun, and help a lot of people. Those three things are goals for me.
That sounds perfect.
Thank you.
Any other thoughts or questions or comments?
Can I give a shameless plug for our Facebook page?
Yes, you can, please.
Small Business
Yes.
Development Center at Clark University. If you all would like to follow and or like, we post our webinars, and we're trying to get more into highlighting you guys. So your businesses. And Tom and I were talking about doing a little maybe interview of each business, not each business, but pick somebody to interview, do a little Q&A, and then we would post that on our Facebook page to help you all get traction, get customers, and that's something we're playing around with. So be on the lookout for that.
Well, that's a great comment there, Sarah. We have a nutritionist, young girl that pre-COVID, she rolled out her nutritionist practice, and she wanted to focus a lot on children, helping children have better nutrition. Well, COVID came around, and I loved her creativity. She says, "Well, I can do something with Facebook." So we helped her develop her own little private Facebook group. And this past weekend, she just went over 1,000 members in a private group. And this group is starting to boom. And you just look at it. But anyway, it's called Cooking with Kids. If you get a chance, look at it. It's a lot of fun to watch. And if you have kids, I guarantee you would love the content. What Sarah's talking about is being able to take your brand and help you increase your personal brand in that community we're talking about. And we're doing that with just an informal interview with one another, making that connection with you, and lets you take your elevator pitch or your little deck and tell the world about what you do, how you do it, and why does it matter.
Awesome.
Well,
Sarah, can you put that, I'm sorry, can you put that in the link, the chat, the direct URL for that, please?
For the Cooking with Kids?
No, for the Facebook page.
Yes.
For you guys.
Can you do that, Sarah?
Yep.
Just
Thank
put
you.
it in it's SBDC. I'm not quite sure what the full URL is. Facebook.com/SBDC.
Something like that. I'll get it, and I think it's on the email that I sent out last night at the bottom, the reminder email, but we're going to send something out today, so I'll make sure it's on there as well.
Do you guys want like note slides from this session? All these slides can be in a note.
Yes,
We can send that to you, and we can include that there in that email. We'll do that.
Thank you all so much. This has been amazing.
Well, I loved listening to you guys. You guys make it fun for us, and listening about your businesses. You're in the front lines doing this, and I tell you, I've got the best job in the world, and that's helping you guys live your dreams, and that's a lot of fun for me. So I enjoy our time with you, and thank you very much for attending today.
Thank you for having this.
Yes, thank you.
Thanks, Tom.
Bye-bye.